Hello, everybody. Hope you guys are doing great today. I want to say welcome to the Stock Options 101 Trading Masterclass. And today I am your mentor, your host, Dell Davis, and I'm going to be teaching you guys how to trade into the stock market and how to become profitable, like how I've helped over 500 students become profitable within the stock market. And I'm also going to be giving you all of my strategies that I've used over the past 5 years to become profitable within this market. So I want to say welcome. Before we get started, I would just like everybody, like if you could just introduce yourself into the comment section and just tell me where you're watching from. And we'll also have to wait a little bit to have couple of people, join the class and then we can get started. So let's just hold on a little bit while we wait for people. Yeah, you're welcome. Welcome, welcome. Welcome, guys. Welcome, guys. Welcome. Okay, okay, okay. All right, guys. So we're gonna get started, and then for those that are gonna come late, what's gonna happen is they will have to watch the replay, of the live, and whatever questions that you have, you can always send that question to us, or you can also put it in the comment section, and we're still gonna read those comments as they come in. So, guys, I want to say welcome to everybody. Welcome to the masterclass and I'm your mentor, Del Davis. First of all, I'd like to introduce myself. My name is Del Davis, and I've been trading for over 5 years into the stock market. I used to work at Amazon back then, and I quit my job, sucked it in, spent all these years trying to do research and understand how the market works, and just analyze the entire market till I figure out exactly what works in the market and what doesn't work. So what I've learned over the past time, I've been able to like mentor over 500 students, you know, um, become profitable traders. And some of them today, they're not even working 9 to 5 anymore. They're a professional trader. They're trading full time now. And that's what every one of us we want. We want to have that financial freedom. We want to break away from the 9 to 5 curse, that we were born and we saw our parents working 9 to 5, where get old, retire, and got nothing to show. So we have the stock market where people are trading every day, making thousands of dollars into the stock market. Instead of us going to work for 20, 30, 40 an hour, you can make that in a minute, in a second. And in a day, if you can make five, six, 700 as a beginner, that's a good start, So I know that's the reason why we're here. We want to make this money. We want to change our lives. We want to have that financial freedom. We want to take vacation where we don't really have to worry about our manager like not approving our timeout or our vacation time and stuff like that. So all we need, we want to have our computer, our phone, and our internet and travel the world and make money while we're on tour or while we're having fun out there. So without wasting much of our time, let's get straight into this course. This is a stock options course, and at the end of this course, you're actually going to learn a lot. You're going to understand how the market works. In this masterclass, you're going to understand the entire thing about the stock market, how it works, and the importance of options trading, how you can trade options, how you can become profitable as an option trader, things to do, the do's and the done. Okay, so this class is going to be entertaining, guys. So I want to say you guys are welcome, and let's have fun. So, guys, this course is actually for absolute beginners, okay? People with zero knowledge, they're the people this course is for. And another thing I want to talk about is if even you been trading, you're not just profitable. There are things that you're actually lacking. And at the end of this masterclass, you're also going to be able to understand exactly what are some of those things that you've been missing that's holding you back and not making you profitable. Okay, and when I'm going fast, just let me know, and then I'll just hold back a little bit because I really want you to understand what we're doing here. Because the goal is for us to make money and not to lose money. So that's what we do. But one thing, guys, I also want you to join the Discord. Get a link. It's down. Just click on the link and join the Discord. It's free. Join the Discord, and I'll also see you in the Discord. So at the end of this course, you're going to have a solid foundation about trading, and you're going to be able to approach the market with so much confidence at the end of this masterclass. And you're going to be able to manage your risk and make some informed decisions when it comes to trading. So, what you're going to learn, we're going to talk about the foundation of day trading. We're going to do chart analysis skills, trading strategy, risk management techniques, emotional disciplines, and that's something a lot of traders usually find so hard, even professional traders. If you can't control your emotions, the market is going to control your bank account. So, if you don't want the market to control your bank account, guys, we have to control our emotions, okay? And that's why trading usually show who you are. That's some of the good things about trading. And we're also going to talk about, we're going to practice with our demo account. That's the sweetest part. At the end of the masterclass, we're going to be able to practice with our demo account and trade live into the market and see how it works. So I want to say welcome everybody, guys. So for the course outline, we're gonna in module one, we're gonna talk about what is trading. Module two, we're gonna talk about understanding the market structure. We're talk about chart basic and technical analysis in module three. Module four, we're gonna talk about trading strategies. Module five, we're gonna talk about trading psychology, and module six is gonna be our live demo trading, where we're gonna practice live into the class. And if you have questions and answers, or if you have questions, you could just post it in the comment section, and I'm also going to answer those questions. So, the big question is, what is trading? That's the question everybody asks. What is trading? Okay? If you know what trading is, just put it in the comment section as well. So, trading is the art of buying and selling financial assets such as stocks, bonds, commodities, currencies, or derivatives with the goal of making a profit. Traders take advantage of price movement in financial markets to earn money by buying assets at a lower price and selling them at a higher price. Now, the easiest way to actually define trading is somebody got an iPhone and you have a Sningers here and they're interested in the Sninger. So they're like, okay, I'm interested in a Sninger, and this iPhone is $100, and this Sninger is like $20. So if you can give me the Sningers, I'm gonna take the 20 off the iPhone, and you pay the $80, right? So they're done trading and then they go into an agreement. They're trading. So that's what trading is. I just define trading as the exchange of goods and services. So if somebody has something and I'm interested in it, we exchange it. It could be for money, it could be services, or it could be item or whatever it is. We just did trading. Okay, so we do trading every day in our lives. Like every day we're trading. Okay, we're trading every day. And there are different types of market that people usually trade in. But again, when we talk about trading in the financial side, we're talking about, trading financial assets. Okay, we're talking about finance. So we have different types of market that people usually trading. We have like the stock market, like the forex market, and we also have like the crypto market. People trade in all these markets, and we also have like the futures market, the inbound, like the bound. Like it's a lot of markets that people usually trade in, and they make a lot of profit. But for me personally, I trade into the stock market, and in the stock market, there is something that I trade called options, okay? And that's exactly what we're going to be talking about in our course. So, for stock options, investors they buy and sell shares of public traded companies. So, like companies like Tesla, companies like Amazon, Walmart, these are companies that people usually trade to have shares in. So it's just more of you having ownership within these companies. You're like, oh, I like this company. I want to hold ownership within it. I mean, you don't really have to be related to the CEO or the vice president or whoever of the company. You can own shares. These are public companies that they're listed publicly. Once you have money, you can have ownership within these companies and become a shareholder. Okay. And for the forex market, they're trading currencies, which is foreign exchange, right? So the forex stands for foreign exchange. So like you have the USD and the Great British Pound, you're like, oh, the British Pound is gonna be higher than the USD, or the USD is gonna be higher than the Great British Pound. So it's all about currency fluctuations. So whatever currency that goes higher, that's how you make money. Whichever one that goes lower, that's how you also lose money. So it's all about currency pairs fluctuations. Okay. And we have the crypto markets where people are selling cryptocurrencies. These are digital currencies like the Bitcoin, like the Ethereum, like the Dogecoin. You just name all these coins that people are actually trading every day. These are all cryptocurrencies, digital currencies. Now we know the type of markets that we trade in. Next thing we're going to be talking about types of traders, right? So we have to understand what type of traders are trading into these markets. So we have day trader, okay? The day traders, they're pretty much buying and selling assets within the same trading day to capitalize on term price, on short-term price movements, okay? So day traders, they're trading every day. They're like from 9:30 Eastern time in the morning till 4 o'clock Eastern time in the afternoon or in the evening. So they go into the market, they trade, and they get out. They sell the same day, make that profit or take that losses and get out of the market the same day. So they're called day traders. And we also have swing traders. Swing traders, they're traders that are actually trading and holding assets for several days or week, to make profit from intimate price swings. So let's assume the price is $100 for Amazon, and you're swinging saying that I believe the price of Amazon in the next 2 weeks or 1 month or a couple of days is gonna go up to like 120. You're kind of like holding this assets for that long period of time with the mindset of it going up for you to make profit and take that profit. Okay, so one of the things that I recommend to people that I'm actually mentoring is doing swing trading. So we look at the chart, we analyze the chart. Based on our analysis, we make decision that either the price of the stock is going to go up or the price of the stock is going to come down. And based on that, we swing. Because when you're swinging, you have a longer time to make decision. You're not in rush. And some people, they're working 9 to 5, so they wouldn't be able to look at the chart 24/7. So when they're swinging, it's better, like during their leisure time, they could just go on the charts and just look at the chart or look at their investment and see what's going on there. And if it's going against them, they can just sell it out and get out of it. Unless they're traders, they're looking at the chart 24/7. Because remember, you're investing your hard-earned money, so you don't want to make any second, or you don't want to take a second and lose that money. So that's the reason why day traders, they're trading every day. So day traders, they don't have the 9 to 5 job unless you have a job that's comfortable, that gives you much time to look at your phone and your computer or whatever it is. But with that being said, swing trading is what I usually recommend to most of my beginners. And we also have something called Skyping, okay? Skypers are people who actually trade small positions within the market. So they're like, okay, we're seeing the price at 100. I believe it's going to go to 101 in a couple of minutes. And these people, they make thousands of dollars in a couple of minutes, in seconds. So they're just looking for shorter position. They could be like, it's going to leave from 100 to 100.5. So they're looking for shorter position, but remember, they're putting thousands of dollars on these trades, and that's why they're making a lot of money in a couple of minutes, in a couple of seconds, okay? So they're looking for shorter positions in the market, take that trade, make that money, and get out. And the last on our list, we have something called position trading. Okay. Position traders, they're holding assets for a long period of time. They hold it for like months, for week, or even year. So those kind of people, let's assume you're holding a share of Amazon at $100. And you're like, I'm gonna hold this in the next 3, 4, 5 years from now. It's probably gonna go to 200. So if you have a lot of shares, you're definitely going to be making money because it left from $100 to 200. Okay, so they hold it for a longer time. As long as you're not selling or getting out of your position, the position is going to be yours. I don't care how the stock falls, you're still standing at this position. The moment the stock starts to come back, you're still going to be standing here. So, what a lot of people usually do, there's something called dollar cost average. Every time the stock goes against them, they usually purchase to cover up that position. Every time it goes against them, cover it up. But sometimes it's good and sometimes it's bad. So, we really don't want to like depend on that and keep doing that. So, guys, now we've talked about the market. You understand what the stock market is. You know what the forex market is. You know what the crypto market is. And we also talk about the types of traders. You know what day trading is. You know, we trade in a day, take profit, and get out the same day. And you know what swing trading is. Swing traders, they hold assets for several days or week just to make profit, you know. So swing trading is good for people that are working, people that are busy, that don't really have the time to look at the charts. So guys, at the end of this class, you also want to take a look at swing trading, okay? And Skypers, if you have thousands of dollars and you want to do Skyping, well, that's fine. If you have the time to go and get out, that's fine. You can also do Skyping and position trading. I usually do position if I'm holding shares in companies, okay? Like purchase a lot of shares and hold them for years, okay? So that's for position trading. But for this class, guys, we're going to be talking about option trading, okay? We're going to be talking about options trading. And I believe a lot of you guys have heard this word online, like what option trading is. How do we trade options? So at the end of this masterclass, you're definitely going to know how to trade options. So what are what are the options and how do they work, right? What are options and how do they work? That's the big question. So again, I want to say welcome to the Options Trading 101 class. I'm going to be unleashing everything that I've done over the past 5 years into the trading industry and some of the things that I've learned and some of the things, you know, my mistakes that I learned and also my skill set that I've learned and those things that I've been imparting into others. So that's exactly what we're going to be talking about. But before we get started with this course, I want to play a short video of some of my students. You know, they're being killing it within the market and they took the mentorship program. They've really been killing it. So I want to play the short clips so you guys can listen to them.
Dell actually helped change my mindset about trading. Unfortunately for me, I got scammed over $10,000 on trading courses that didn't work. I was so frustrated and almost gave up.
Yeah, she
But
lost
after
over
meeting Dell, things have
$10,000.
really changed for me.
She was
He's not
scammed.
just a mentor, but a very kind hearted person who wants others to succeed in this game. Once I got through with his one on one mentorship, I'm seeing consistent results and finally trading with confidence.
I just want to say a huge thank you to Dell. Now, after my girl and I took the classes, our trading account is up
Yeah, this is Mark
$20,000
too.
this month. In the boot camp, it helped a
Mark was
lot,
part
but
of
honestly,
the
the
boot camp.
master class was the game changer. Now, it gave us the confidence, the strategy, and the
Yeah,
mindset to really win. So, thank you, Dell. Seriously, this has
like I'm
changed
telling you
everything for
guys
us.
though.
Hey there. So I was part of Dell's first 3-day trading boot camp in May, and I gotta say, I learned
Her
so
name is
much. I
Christian.
mean, I actually signed up for the mentorship program right after, and it's just been a total game changer. And all I can say is thank you so much, Dell. Seriously, I am now at the point where I'm about to quit
Do
my
what?
job and go all in on trading, and this has just completely changed my life.
All right, guys. So that video was some of my students from the previous master class, and they're killing it a lot, and they're making a lot of money. But well, I want to say welcome to Options Trading 101, and this is where we're going to talk about options trading and how we can trade options and start making money. And at the end of this masterclass, you're going to be able to trade confidently. And I mean, engage the market and understand how options work and how you can start to make some money. Okay, so options are pretty much contracts. Okay, they're contracts that you're holding just for a specific price and within certain period of time. So it's not like stock where you're holding for as long as you can. But options, they're just contracts that you hold for a specific period of time and you know for certain price within certain time range. So once that time comes, it's expired. So it's just like on the job, how you go to get a job. If you're on contract, you're working for a certain time. If you're a full-time employee, sometimes you're going for a year, two, or whatever. But when you're on contract, you have like 3 months, 6 months, or whatever month that you're working for. Once the contract ends, everything ends right there. So we have two types of options, guys. The two types of options that we have is call and puts. Okay, so when we're trading options, we make money when the price go up and we make money when the price comes down. Okay, so it's not like stock where you only make money when the price goes up, but when we're trading options, we make money both ways. And we have something called call and puts. Now, what is a call option? A call option is a prediction that the price of the stock will go up, or you could say the price of the stock is going to rise. So when you believe that the price of the stock is going to rise, let's say the stock is at $100 and you think it's going to go to $110, which is from 100 to 10 is $10 different. You call this a call option. Okay, you're saying the price is going to rise. And if you think the price of the stock is going to come down, we have something called a put option. Okay, a put is the price is going to come down. So if the stock is at 110, you're saying it's going to come to $100, or it's going to go to $90, or it's going to go to $80, whatever amount that you think the price of the stock is going to go to. And that is based on something called technical and fundamental analysis, which you're also going to learn as part of this masterclass. So, if we think the price of the stock is going to come down, that's when we do a put option. We predict that the price of the stock is going to come down. And there are two things that I also want you to understand. When you look at the candle chart, guys, you're going to see a green candle and you're going to see a red candle, right? So every time you see a green candle, they're the bulls. So the bulls are the buyers, okay? Just call them the buyers. So every time you see a green candle stack up on the chart, the buyers are in control of the market. That is bullish and that is call. It means the price is going up. The buyers are buying the stock and pushing the price up. And then when we see the put option where we see like a red candle and all of the candle just stacking down, coming downwards, this is a put option. It means the sellers are in control of the market. So the sellers are pushing the stock down. So the stock market has just two people, the buyers and the sellers. So these two people, they're competing within the market. Whoever has the leverage or whoever has the power controls or dominate the market. So we have the bulls and we have the bears, okay? The bulls and the bears. So hope you know the difference between a call option and a put option, and hope you know the bulls and the bears, the buyers and the seller. Now, let's go to our next here. We're going to be talking about the difference between an options and a stock. Okay, what's the difference between stock options and stocks, right? So when we're trading stocks, right? When we're just trading stocks, like, you know, we're owning a piece of that company. So remember, stocks are public listed companies that is open to the public to have ownership within them. So when we're purchasing these stocks, we're just having ownership within them. So you don't have to be related to Elon Musk or Jeff Bezos or whatever before you can have share in Apple or in Tesla. All you have to do is to go get a broker, create an account, deposit for some money, and back up a shares that you can afford. And when a company starts to go up in price, you start to make money because what? You are a shareholder within that company. Okay? So when the price starts to go up, you start to make money because you have a share within that company. But on the flip side, when we're trading options, it's a contract that gives you the right but not the obligation to buy or sell a stock at a specific price. So it's a contract that we're just having for a certain amount of time and for a certain price. We're not obligated to buy or sell, okay? Unless when you're purchasing shares within a company which is stocks, you will have to hold it for as much time as you can because you want to make money when the price goes up. But when you're doing options, you have the opportunity to both sell and to both buy in both ways. You're not obligated to nothing. So you can do whatever you want to do at any time. Take your profit whenever you want. Get in, get out whenever you want. You don't owe nobody nothing. That's why option is really good because I can decide today and say, looking at the market is gonna go down, and then I go for like a put option. And then I look at the market today. I'm like, okay, the market, I believe that the market is probably going to go up. And then I go for a call option. So that's how we engage the market when we're trading options. And that's the reason why you're seeing a lot of people quitting their 9 to 5 job and making thousands of dollars trading to the stock market. And I want you guys to do the same. And if you have any question, I also want you to leave it in the comment section and we're going to answer those questions. Okay. So the main difference with stocks, you own a part of a company, but with options, you only have the right to buy or sell without owning anything unless you exercise the option. So when you buy 5 contracts or 15 contracts, when you're doing options, remember options is a contract. So we don't have shares, we have contracts. But when you're trading stocks, you have shares. But when we're trading options, we have contracts. So assuming you have a 15 contracts of a public listed company like Tesla, right? So you can sell this whenever you want and take your profit wherever you want. Okay? You can sell whenever you want, buy whenever you want. Nobody is holding you back. Nobody is going to sue you. Nobody is going to tell you nothing. You can sell whenever you want, take your profit and get out. But if you're doing stock, you will have to hold this share to make money because you want the price to go up. So you're gonna keep waiting. But options, we can decide price come down, we make money. Price goes up, we make money. So as soon as you sell these contracts, you make your profit or you take your losses. So that's the good thing about trading options. But there are key things that I want to talk about here, guys. So the key things that I want to talk about, these are terminologies that we actually use in option trading. There is something called a strike price, expiration date, and a premium, okay? And we're going to be going deeper into that. So what is a strike price? So the strike price is the price at which you can buy or sell the stock with your options. So let's say we have Tesla. Sorry, guys. We have Tesla for $300 per share, right? So if we're trading options, we're not gonna pay 300. We probably because let's assume we're holding it for like 1 week, right? We not gonna pay this 300. We probably gonna pay $100 or $75 or whatever the price is going to be. So this 300 is the price at which the stock is selling for right now. So that's the strike price. So the strike price is pretty much the price at which, you know, the stock is selling for right now. That's just the stock price. So if it is $100, that's the strike price. If it is 200, that's the strike price. If it is 300, that's still the strike price. Okay. So anytime you see a stock and you see those prices from 200, 300, 400, 500 upwards or downwards, they're called strike prices. And you're going to understand more about strike prices as we get deeper into this class. So the next thing that I want to talk about is expiration date. Remember, we have a time that the stock is going to get expired. So if we pick a day, we say our contract should expire in 1 week. The 1 week becomes your expiration date. But remember, if the 1 week comes and you go for a call option and you say in a week, I believe the stock is going to leave for $100 to $110 and the stock doesn't go up and it starts to come down, you're going to start losing your money. And as time goes closer, there is something called delta and gamma, which we're also going to talk about in our masterclass. So if you do not take those things into consideration, at the end of this expiration date, your contract is going to be worthless, meaning you're going to lose all the money that you put into this. So that's why before we pick a strike price, we want to do our due diligence to do all of our research and make sure we're doing the right thing. Okay. So what is the premium? The premium is the price you pay to buy an option contract. So if I'm purchasing a option contract for $100 and I pay 100 per contract, that's my premium. That's the amount that I'm paying for the option contract. Okay, so that's your premium right there. Whatever amount you're paying, that's your option premium. So we remember, just to recap, we have the strike price. So the strike price is the price at which that stock is selling for right now. And then we also we have the expiration date. The expiration date is the day at which your option gets expired. So that's the expiration date. And then we also have the premium. The premium is the money that you pay for that option contract. And also, there are things that I want us to look at. We have something called in the money, at the money, and out of the money, what they are. Remember, guys, it sounds big, but once we start to do the reality, like trading life, you're definitely going to understand how these things work. So, in the money, the option has value right now. For a call option, stock price is higher than the strike price. For a put option, stock price is lower than the strike price. So, when we're trading in the money, let's assume the strike price is $100, right? I always tell my students we don't want to go above $3. So if it is $100, we and then we want to do a put option, which we're saying the price is going to come down from $100. We probably want to stay to like um $99 to $97 in between. So when we're doing this, we're in the money and not out of the money, okay? And as soon as you start to hit 99, 97, 98, going downwards, you start to make money, okay? So you stay in the money. And at the money is the stock price is exactly the same as the strike price. So if it is $100 for the strike price, you want to stay at $100 and you say, okay, I'm going to do my car option $100 because I want to stay in the money. So if it starts to go from 100 to 101, 102, 103, you start to make profit right away. So you don't want to say, I believe the price is going to go to 120, and then before the stock leaves from 100 to 120, you never know. It could just pull back and just dump. And who becomes the loser? You, of course. So we want to stay in the money and not out of the money. And out of the money is more like you going further above or below. You're going $3 to $4, $5 from the strike price. So you always want to stay closer to the strike price. Do not go far away from the strike price, okay? So you buy a call options for stock XYZ at a strike price of 50. If the stock raises to 60, the option is in the money. So remember, it's just $10 difference. So if you say you're doing a call options at a price of like $50 and the price goes to $60, you just make, profit right there. That's a lot of money. So it depends on how many contracts that you're purchasing. You're in the money because you're not far away from the money. And you buy the put option for stock ABC at a strike price of 40. If the stock falls to 30, the option is in the money. So guys, it's $10 because you're saying the stock is coming down. So as it's coming down, you're also going to be making money. So you don't want to go far away. You want to stay within that range, okay? So we're going to be talking about this. I'm going to explain this to you guys to actually understand how this work, okay? So as we can see here, guys, this dude, yeah. So as we can see, guys, this guy, his name is John, right? John, he's selling this condo for like $5 million. So I want you guys to see this candle as a stock, right? We could see this candle as Amazon. Let's see this as Amazon. Yeah, I'm seeing your question, guys. I'm seeing your question. So I want you guys to see this building as Amazon, right? This dude, his name is John. Now I'm about to explain how option work in a very graphical term. So he's selling this building in Miami for $5 million. Okay? And this dude, his name is Abdul. Abdul comes in and he tells this dude, I'm interested in this building. So now remember, there are two people, the seller and the buyer coming together to transact deal for this building. Now, This dude is selling the building for $5 million, and Adu comes in. He's like, "Hey, I can afford the 5 million for this building right now." Okay. Now let's say this is Amazon, and the strike price for Amazon right now is probably $100, right? So now this is the price. So 5 million. He's like he can afford this. He's like, instead of me buying this building for 5 million, let's go into a deal. I can give you 50K per month and hold this building for like 5 months. Okay, so I'm going to give you $50,000 every month, but I'm going to hold this building for the 5 months. So remember, the 5 months that he's holding it for is your expiration date when you're trading options. Okay, so the 5 months is our expiration date. So they go into an agreement, they sign a deal, and he gives the key to Abdul. Now, Abdul owns this building for the 5 months. So when you go into a deal with the buyer and the seller, everything is being automated, guys. So when you go into the deal, you cross the deal, everything is automated, like I said, cross the deal. Now, the building is in this dude's hand. So the value of this building has increased drastically, like has increased, right? So now he puts the building out for 100K, right? So the building has increased in value up to 100K per month now. And this pretty girl, her name is Laura. Laura comes in and she's like, "Hey, I want to rent this building for 100 a month because she got some money." And then he's like, "Okay, cool. I'm gonna give you this building for 5 months, but you're gonna pay me 100K per month." Guys, how much he's getting? This is 100% because he's putting 50 and getting 50K back every month. And all the seller knows he should get his 50,000 every month. This is how people make crazy money into the stock market when they're trading options, guys. It's no magic. It just common sense. Like they make a lot of money. So instead of you like kind of like purchasing something like a share and holding this thing for as long as you can, just do options. Just look at the value of the company, do your technical and your fundamental analysis, buy this company and hold it for days, for week, or whatever. As the price or the value of that company increases, you make some crazy money. So this is exactly how we trade options. If you have any question on this, put it in the comment section. Now, we've talked about a whole lot of things. We've understand how options work. We talk about call option. We talk about put options. We also talk about types of traders and things like that. We talk about in the money, out the money, and at the money. And we also give an example of how options work. Now, what are the platform and tools that we need to start trading? Okay, because we can't just trade with our mouth or with our hands. We need tools and platforms to actually trade. So what do we need? The first thing we need is a chart. Okay, the chart is what going to tell us if the market is going up for a call option or if the market is coming down for a put option. So you want to know if the price is going up or going down, and that is based on technical analysis. That is looking at the chart and making that decision. And definitely you're gonna understand charting like a kid. Like if you're gonna understand charting like even like a like if you're like 5 or 6, 7 years old, you're gonna understand the chart because I'm gonna make it as easy as possible for even like 5 or 6, 7 years old to actually understand it. So we're going to talk about chart. You need to have chart, and what we use is TradingView. Okay, you want to go to tradingview.com. Just add .com to this and go to tradingview.com. And the next thing that we need is a broker. So the broker is like your bank. Okay, that's where you're going to keep all of your assets, like your stocks, like your options, or your whatever. That's where you're going to keep it, your broker. And we always want to do brokers that are regulated, okay? Especially the brokers that are in America. So Robinhood, I recommend Robinhood and Webull for beginners. So go to your app store and type Robinhood and then download Robinhood, create an account on Robinhood. And then once you're done creating an account, as the class goes on, we're also going to be able to go deeper into Robinhood and then set up our options trading account. And then the next thing is go to your app store and download Webull, create an account on Webull. Once you're done creating an account, we're gonna walk you through the step on how we can start trading. Now we already have our chart, which is trading view. We have our broker account now. The next thing we want to do, so you're the stock buyer, so you definitely want to have this. Both the buyer and the seller, they want to have this. Now we have the broker in the middle. So your Robinhood is right here, your Webull is right here, which is the broker. So the buyer and the seller makes their decision within with the broker, and the broker sends the trade to the stock exchange on Wall Street in New York. So everything is being automated. So both the buyer and the seller come to a decision, make the decision, and then make the trade and send the trade up here to the stock exchange. The broker takes it and sends it to the stock exchange. And there are types of brokers that we have. We have Robinhood, we have E-Trade, we have TD Trade, we have ChartSwap, we have Fidelity. There are a lot of brokers that we can use to trade. But guys, you want to make sure that you're using a broker that's regulated, a broker that you actually have control over, because there are some out there that they're going to take away your money and you're not really going to be able to get it. So we want to use brokers that are really, you can use any of these brokers, but for beginners, we're going to have our Robinhood and our Webull. So guys, I would like to stop this class here for today. Um, if you actually enjoy the class and you want to go deeper and master the class, like go deeper into technical analysis and fundamental analysis, where you're going to be able to start using the chart like a professional, where I'm also going to be able to give you all of my trading strategies that I've used over the past 5 years to make thousands of dollars into the market, and also my strategy that I've used to help a lot of new traders to make money, like the videos that you saw, the testimonials that you saw. I want you to hit the link and sign up for the official trading masterclass, and in that masterclass is fully loaded. Okay, so if you love what we just did and what you just went through and you want to go further, I want you to click, because I have a full course that explains everything step by step on how to trade into the market, how to engage the market. You're going to learn support and resistance, supply and demand, your entry and your exit point, break and retest strategy. And at the end of it too, I'm also going to be giving you my killer strategy that I've used to make a lot of money in the market. So I want you to click the link and sign up, and I will see you in the next class. And do not forget, join the Discord too, and I will see you in the Discord as well. So I appreciate you guys being here today, and I'll see you soon in the masterclass.